This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well as head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. Alex Steele is out today. Not to worry. Norma Linda from Bloomberg News. She joins us in studio. Norma, good morning.
Good morning.
All right, thanks for having us. We got a lot to cover here today. We got markets trading higher. We got geopolitical news in the Middle East. We'll get to that in just a moment. We had some economic news today. Retail sales came in better than expected. Earnings, of course, continue. We're going to get to all of that today. But first, let's kick this whole thing off. I'll go over to good friend Lisa Mateo for a Bloomberg Business Flash. Lisa, what
you got it. And this report is Market Drivers, brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. Treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. All right, we have stocks on the rise, and this is after that solid retail sales report, rising 0.4% in September, just a 0.1% gain in August. We had initial jobless claims for last week, unexpectedly fell after jumping the previous week in southern states affected by Hurricane Helene. It dropped by 19,000 to 241,000 last week. And September industrial production fell 0.3%. That was below estimates. So we have the NASDAQ up 0.2%, 52 points. It's at 18,416. The Dow up 0.3% at 43,219. We have the S&P 500 up about 0.1% or 10 points at 5,852. The two-year yield 3.96%. That is up 3 basis points. A yield on the 10-year 4.08%, and that's up about 7 basis points. To commodities, we have Brent crude, $74 a barrel. WTI crude, $70 a barrel. We have gold, spot gold at $2,689 an ounce. We're also keeping an eye on chip stocks. Taiwan Semiconductor hiked its revenue outlook, so we'll check in with TSM right now. It's up about 10%. And then when you look at the 11 major industry groups, semiconductors at the top is NVIDIA. NVIDIA shares right now, they are up about 1.5%. We have Micron up 2%, Broadcom same there, AMD up about 0.5%. Also after the bell, the attention turns to Netflix, and we'll look at that right now. Those shares down about 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Nora.
All right, Lisa, thank you so much. We appreciate that. Norma Linda sitting in for Alex Steele, and I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio here. The retail sales number, Nora, that look pretty darn strong. Looks like the consumers are still spending.
They are still kicking. It's interesting when we're looking at different aspects of the market. The consumer is a hard thing to read, at least from my POV.
Yeah, exactly. So, I mean, we know there's a kind of a bifurcated economy out there. A lot of the folks are in fact struggling, particularly with inflation, dealing with the higher costs. But again, you look at the aggregate numbers, some pretty solid numbers as it relates to employment, as it relates to spending. And we've got yields higher on the back of that retail sales number. We got the 10-year Treasury up 8 basis points, 4.09% here. Let's check in with Vince Signorelli. He covers all the markets. He talks to all the traders out there on Wall Street. That's his job, and he does a great job. Vince, what are you seeing out there in the marketplace today on the backs of what, again, is another pretty solid economic print?
Yeah, we're seeing yields react. Treasuries pretty much at session lows. More in the back end of the curve. I think this is markets taking out a few more rate cuts. They've got a little aggressive in the Treasury market with how many Fed rate cuts were coming. Right now, we're actually seeing the 30-year yield at session highs at 4.38%. So some steepening of the curves with the 2-year pretty steady at the moment. Starting to see the equity markets roll over a little bit. I mean, it may be leaking into equities a bit. A little bit of euphoria after the numbers. Obviously, the economy doing well, and that puts good expectations on earnings. But we're also taking away the punch bowl with the Fed, possibly with the data we saw today.
I mean, you mentioned earnings. We just kicked off earnings season last Friday. How are we thinking about earnings and how this will play a role as we think about this easing cycle here?
Yeah, it's interesting. There's an argument for both sides of it. The bar is set so low for earnings. So There are some who are thinking, well, that's great. Earnings are more likely than not going to continue to beat as we've seen. That's positive for the market. We should continue to trade higher. The other side of the argument is, well, if the bar is set so low, we really need to see big beats, not just little beats, for this market to really take hold. I'd also mention that the jobless numbers, the claims coming in pretty much as expected. We didn't see really any major effects from the hurricanes and jobless claims that we expected. North Carolina claims actually were lower, where you would intuitively think from North Carolina the claims would be higher as people were out of work due to the hurricanes. Now, I don't know if that's going to come later on, but the impact on jobs data next week may be interesting. The forecast at the moment is 125,000. I think the whisper number is up to 155. So if we see a beat, a strong beat with what the market expects as opposed to what the economists expect, and bond market's going to be in for a rough ride next week.
Hey, Vince, we had the ECB cutting rates for the third time here. Looking at the Bloomberg Dollar Index, stronger today, up almost 3% just over the last couple of weeks. What are you seeing in the currency markets these days?
So a lot of what we're seeing in the currency market is a lot of people thinking the dollar was going to go lower, and we're seeing some short covering, particularly in dollar yen. It's interesting. We're touching 150 the figure. I think we backed off it just a little bit right now. But you know, there's got to be some defense of that number. There's more likely than not some options expiring at those levels. If we break through solidly to 150, I think the dollar continues to march on in the back of a weaker yen, if nothing else, and also a weaker euro after the ECB cut today. There's potentially more interest rate divergence that we're going to see between the currencies, or the countries, I should say. Not the only thing, obviously, that drives FX, but definitely a help.
So we're always talking about landings. What landing are we looking at right now on a macro level? Are we seeing soft landing, no landing? Which camp are you in?
I mean, if you look at the U.S. consumer, you have to think no landing. But, you know, the difficult thing with these numbers is if you look at retail sales and you take out or take into the equation, you know, credit card spending, revolving credit spending, which is at record highs, you wonder how much of this spending is based on the consumer borrowing as we head into the holiday season, which is not usually a big surprise. Folks tend to spend now and worry about paying later.
Right.
You know, are we borrowing from the first quarter of next year is what I'm thinking.
Hey, Vince, just real quick, 30 seconds. A lot of folks are saying no one wants to take risk here ahead of the election. Do you actually see that in the trading out there?
There definitely is some. There's, especially in the bond market, there's a considerable worry that if Donald Trump becomes president again, he's going to do some significant tax cuts, ramp up spending, you know, and while he'll talk about bringing in Musk to trim expenses, which would be a really interesting thing to watch, to be honest, it's not going to be good for the budget. It's not going to be good for debt, and the debt markets are probably going to react negatively.
All right, Vince, thanks so much for joining us. As always, Vince Signorello, macro strategist for Bloomberg News, giving us the latest on these markets. The Middle East, once again, in the news. Israel says Hamas chief may have been killed in Gaza attacks. To get the latest reporting, we go to Dan Williams. He's a reporter for Bloomberg News. He is based in Jerusalem. Dan, what can you tell us about the events of the last several hours?
Well, it's really over the last hour and a half or so, unverified images circulating online appearing to show the body of Yahya Sinwar, the head of Hamas, lying dead in the rubble of Gaza. Israel's being cautious about confirming it. It has said, however, that in a military action in Gaza, three operatives, 3 gunmen were killed. One of them may have been Sinwar, and now it's working to confirm that. So this has really electrified a country in the middle of a Jewish holiday. And being that this war is now over a year old, it's a year and 3 months, 3 weeks old, I think it's a development Israelis especially and the rest of the region will be looking at very, very closely.
So as you mentioned, this war is over a year old. What is the sentiment on the ground for civilians right now?
It's a war that's continuing. It's really expanded from a surprise Hamas attack on October 7th, 2023 in southern Israel to a Gaza war. That was where Hamas had its mini state. But it's since really expanded into a region-wide war on something like 6 or 7 fronts. So I think Israelis are in it for the long haul, despite the cost. There's been enormous cost on Palestinian civilians, a growing cost on Lebanese civilians, given that Lebanon and Hezbollah are now the focus of Israel's fighting. But certainly, if the man widely seen as the mastermind of the October 7th attack that began all this has been killed, that will really put the Iranian axis that's arrayed against Israel on a rear foot. This would come on the heels of the killing of the Hezbollah chief and several other major figures from Hezbollah in Lebanon. And of course, Israel's been striking back at the Houthis in Yemen. And we heard just overnight the United States has also been pitching in with significant strategic strikes against that group in Yemen. So the big question is how Iran, which to a degree has been orchestrating this, will respond, and whether this will still develop into a front with Iran.
Dan, as you mentioned, Israel's had quite the success over the last several weeks in terms of targeting Hezbollah leaders with great success. To what end do you think their strategy is for Hezbollah in Lebanon?
To destroy and degrade. It's that simple. Hezbollah has spent the last 18 years since the last war in Lebanon between Israel and the group, building up significant forces. In fact, forces that were widely seen as being more formidable than some advanced Western militaries in terms of rocket capabilities, precision missiles, even drones, akin to what we're seeing in the Ukraine-Russia conflict. So Israel's priority right now, having really overrun the Gaza Strip and saying it will destroy Hamas, it's not looking to destroy Hezbollah or overrun Lebanon. What it is looking to do is sufficiently degrade Hezbollah's capabilities, sufficiently demoralize them through the killing of their leadership. And that appears to have been achieved, that Hezbollah reassesses the entire situation. And indeed, the wider Lebanese populace, of which Hezbollah is a part, assesses whether it should be allowing this group to take it into a fuller conflict with Israel.
Dan, thank you so much for joining us. Dan Williams, he is a reporter for Bloomberg News. He is based in Jerusalem and North Carolina. We were just talking minutes ago how fortunate we are to have such talented journalists and analysts all around the world that we can tap into whenever and wherever there is news, and no better example than Dan Williams in Jerusalem. It makes our reporting so much better. Let's switch gears. Let's get back to the markets here. Technology in the play here. Yesterday, I think it was me who said, I think I've seen the top of AI. I think some of these chip companies are going to roll over and blah, 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 blah. Well, then Taiwan Semiconductor comes out with a better than forecasted outlook. So once again, I was proven wrong, particularly as it relates to technology. I don't know what's going on.
How do you feel about that?
How do I feel about that? It lasted all of like 24 hours. My great call there. Mandeep Singh, he's the expert.
He's the guy.
He's the one we go to. Mandeep Singh, he's the tech analyst for Bloomberg Intelligence. So Mandeep, talk to us about Taiwan Semiconductor. A lot of our listeners, a lot of our viewers aren't really familiar with it. Tell us about what this company does and kind of what they announced recently.
I mean, basically, they are the manufacturing factory for all your AI chips, all the chips that go into smartphones. And basically, they are at the leading edge of manufacturing. When people talk about, you know, chips, the most powerful AI chips with the most transistors, they are the ones who are manufacturing it. And look, I think it was quite a contrast between the ASML print and the TSMC print. And what it shows you is the AI side continues to be strong, in fact, being a strong end market as well in the print. So clearly, the top two segments for them are working quite well, and they have more demand than they can manufacture these chips.
Wow.
For NVIDIA and Apple, those are their top customers. And they're raising their CapEx guide. So one of the concerns was, will TSMC raise their CapEx guide given what we heard from ASML? Well, guess what? They are raising their CapEx guide. So ASML's woes were really driven by Intel paring back and Samsung paring back. But when it comes to TSMC, they continue to be strong.
All right, so Taiwan Semiconductor, does it trade in U.S. or ADRs in U.S.?
The ADRs.
All right, the ADRs trade in U.S. TSM is your ticker to put into your Bloomberg terminal. The stock is up 11% today, up 100% year to date. This isn't a penny stock. This has a market cap of over $1 trillion. My ignorance level on this is out of control. I mean, I just didn't know they were that big.
I no longer compute. The number's too big.
No, it's too big. That's why we need Mandeep Singh. So anyway, big company, folks, giving a positive outlook on the chip business. really important for overall tech discussion about AI.
So talk to us about the outlook right now. What are expectations when we think about the tech sector more broadly? I know earnings, people have a pretty low bar, so if companies are doing well, it'll be a really great, great news coming out of that. How is the tech sector, when we're looking at AI specifically, what are expectations right now? I know the bar tends to be relatively high.
I mean, I don't know if the bar is low at this point, given what we saw with ASML. ASML was the case of expectations being too high, and we are taking down bookings by 50%. So clearly expectations were high. It was the management who said it, and now they took back their guide. In the case of, I think, NVIDIA or some of the other bellwethers for AI, look, we've been hearing that the demand for their latest chip continues to be strong. The TSMC print is another validation that, they are ramping up the AI side. It's almost mid-teens of their revenue. This was almost a $0 revenue for TSMC a few quarters back. So in just a span of 3-4 quarters, it's mid-teens of their revenue. That just goes to show, along with the margin expansion, the gross margin growing to 58%. I mean, all this is positive for AI and, for bellwethers like NVIDIA. At the same time, this will drive up the expectations even further. So, the bar keeps getting higher. And at some point, I think you will have misses like what we saw with the ASML, but probably not that soon for the likes of NVIDIA.
So, Mandeep, just about 30 seconds left. Who are the top 2 or 3 or 4 buyers of these chips? Is it the Microsofts and the Googles of the world?
I mean, in the case of TSMC, the top buyer is still Apple.
Okay.
So that validates that smartphone refresh that everyone is waiting for.
Okay.
That segment did well. The inventory is building up. And then NVIDIA. And NVIDIA continues to become a bigger buyer of TSMC's chips. And then you have got AMD and some others. But pretty much every fabless design company, whether it's AMD, Qualcomm, NVIDIA, goes to TSMC for manufacturing their chips because they have a leading node monopoly. I mean, everyone else is way behind when it comes to
So can I go to Taiwan and see them make chips?
Yeah, you should visit one of their factories.
Or
they're opening one in Arizona, though. Yeah,
they're going to do one in Arizona.
Yeah.
Oh, okay, that's cool too. All right, Mandeep, thank you very much. Again, as always, he is our absolute go-to person for all things technology, senior technology analyst. He runs all of our tech practice at Bloomberg Intelligence, and we appreciate getting his time because he's only a floor away. It's not like a big ask.
We love that.
Can you walk up the stairs and talk to us on Bloomberg Radio? Mandeep Singh there. Looking at the markets here, let's talk about the NASDAQ. The NASDAQ, tech-heavy NASDAQ, up about 0.3% off the lows of the day. The NASDAQ 100 up about almost 0.4%. 10-year Treasury, 4.08%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are on records watch with stocks advancing right now. The NASDAQ up about 0.4%, 79 points at 18,447. The Dow up 0.2%, 110 points at 43,190. And we have the S&P 500 up 0.2%, 16 points at 5,858. The two-year yield 3.97%. That's up 3 basis points. The yield on the 10-year 4.08%, and that's up 7 basis points. Over to currencies. The yen weakened 150 against the dollar for the first time since August 1st. Right now checking in with Japanese yen at 149.95 against the dollar. Euro weaker. This is after ECB eased policy for the third time this year. And we have Bitcoin, want to point that out, it's down about 0.8% at around 67,000. Shares of Nestle, they're rebounding after results missed estimates. Shares are up right now. Let's see, Nestle up about 3%. This is over in Switzerland. This is after its CEO, did some damage control, telling analysts he's reviewing the company's product portfolio. You have shares of Nokia, those ADRs down about 5%. After its sales missed, the company also reported it's set to cut almost 2,000 jobs in China. And following, shares of Expedia up 4%, about 4.5%. After the Financial Times reported Uber looked into a possible bid for the company. Uber shares, though, down 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that. Norma Linda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming the video thing live. So you can go to youtube.com and search Bloomberg Podcast, and you'll find the little live button. You can click on that. I don't know. The retail sales today, Nora, better than expected. Maybe the Fed doesn't have to cut in November. And if they don't, is that okay? I don't know. The markets are trading higher here. It looks like it's kind of okay. Let's talk to somebody who's actually has a professional here on this whole thing. David Kudla, he's the founder. He's the chief executive officer, and he's the chief investment strategist. I think that means he's the boss.
It sounds like it.
That's right. Mainstay Capital Management from one of my favorite little towns out there in the Midwest, Troy, Michigan. I've been to Troy, Michigan, cool little town. David, so you get a retail sales number today that's better than expected. You get still a pretty strong labor market. Is this a Fed that has to cut? And if they don't have to cut in November, is that okay?
Good morning, Paul and Nora. I think it's a Fed that will continue to cut. They'll continue to ease because monetary policy is more restrictive than it needs to be. Inflation has come down. I know there's fears that we could see a resurgence of inflation here yet this year into next year. But inflation has come down and is drifting towards target. Certainly it is in Europe. The ECB cut last night. The key here is that when we look at the economy, and I think it's, what's interesting is, do they need to cut for a recession? No. Those that have been calling for a recession for the last 2 years have been dead wrong. And we've kind of mocked this by my phrase, the recession is always 6 months away, that I've actually been saying for 2.5 years now. And yeah, retail sales came in above expectations, 0.4 month over month versus 0.3. We've got strong GDP, Atlanta GDP now forecast above 3%. Labor's hanging in there. And so I always am careful to use the word Goldilocks economy, but we sure, if there's such a thing as a Goldilocks economy, we're sure close to it right now. And the Fed does have the ability to continue to ease as other central banks are around the world, just because, we're in that sweet spot where they can make monetary policy a little less restrictive.
So tell me, David, which economic data is most paramount right now? I know we've always had our eyes on inflation, but it seems as though attention is really shifting toward employment data as being more important right now. What's your outlook on that?
Yeah, Nora, and I agree. It's really, it's this, when we look at employment or labor versus inflation, where are we? And we see inflation drifting down. We think that's becoming a more non-existent problem. We keep getting mixed data on labor. There was some screwy numbers in the back months that had to be revised. But if we want to keep an eye on labor, we want to keep an eye on the consumer. being 2/3 of our economy. So we need labor to stay strong enough, but not too strong, and not get weak enough that they're cutting, for the reasons we don't want, which is the fear of a recession. And we think that the fears of a recession, there's anecdotal data there. What's happening with car loan delinquencies, personal debt, credit card debt. There's that anecdotal data. But when we look at GDP, we look at labor, we look at inflation, we look at retail sales. We've got, when we look at the macro numbers, we've got an economy that keeps chugging along, and correspondingly, a stock market that keeps chugging along. Again, the people that have called for a bear market at any time over the last 2 years, they weren't early. They were just wrong, dead wrong. And we're still constructive on stocks. It always looks prudent, right? It always looks prudent or smart to say a recession is right around the corner or a bear market's right around the corner. But it's key. These people that have been saying this for so long, they're dead. They're just been wrong.
So, David, how are you advising your clients now versus maybe this time last year?
All that said, we're always concerned about when the next shoe will drop, or, when the first shoe will drop or the next shoe will drop. We are concerned about that. So that's why we're keeping an eye on the data that we're talking about here on is inflation on a glide path down to the Fed's target? We believe it is. Do we still have, though, a robust economy? Are we headed towards recession? We don't think so. So we continue to be very constructive on the markets. We're overweight equities. We've changed our term structure on our bond holdings somewhat. We were last year, in the first part of this year, on the shortest end of the curve, just capturing yield rather than any kind of interest rate play or anything else, because duration has worked against you. We think there's an opportunity over the next year that duration will help you. You can get that capital appreciation combined with the yield on your stocks, clip the coupon and enjoy some capital appreciation. But I think my strongest recommendation is, all the naysayers, all the doomsayers, the pundits that are, collapse is imminent. Look, they've been wrong. And so we're very constructive on the markets. We're bullish on the markets near term. We have an election coming that will get out of the way, so that removes some uncertainty. And we're heading into the seasonal period that's strong for stocks from November through April. So, there's a lot of economic seasonality and other factors that are good tailwinds for equities right now.
David, you mentioned the election. You got 19 days, I think, coming up or very close here. What do you tell your clients about it? I mean, is there any way to election-proof a portfolio or not? Don't worry about it.
Well, unfortunately, and not our clients, because we educate our clients about this a lot, every election cycle, don't election-proof it by going to cash. That's the worst mistake that investors make. Because look at this election, like others, how polarizing, between the two candidates. If so-and-so gets elected, we're going to heck in a handbasket. And the same thing for the other candidate. And there's all this concern. The reality of it is the biggest factor for the market is uncertainty. Markets hate uncertainty. Right. That will be determined here in 3 weeks. So the key is don't go to cash, stay invested in the market. And as we see who it looks like what administration will be in office here in a few months, that's where we want to be tactically moving our portfolios to. Worst mistake is to go to cash. And look, this year is a perfect example. We have the best election year through today for the markets that we've had since the 1930s. Yep. That's how good this year is. Yep. It is not the time to go to cash, to wait on the sidelines until you see how it comes out, right? Yep. So it's looking at what do you expect with the candidate that'll win, tactically allocating your portfolio for that, and stay invested. Yep, excellent stuff. As always, David Kudla, he's the founder, chief executive officer, and chief investment strategist at Mainstay Capital Management. And David and his team are ranked in the top 10 on Barron's top 100 independent financial advisors in 2024. So we appreciate getting a few minutes of his time. Let's go to a really good story out today. I mean, Blackstone,
You know, they got like $1 gajillion under management. The stock, they put out some good numbers recently, just today. Stock up 5% today, up 28% year to date, 52-week high. Some phenomenal performance coming out of the good folks at Blackstone. I want to break it down, and we do that with Paul Goldberg. He's Bloomberg Intelligence Senior Equity Analyst. Paul, what is Blackstone, and why and how are they executing so well? Just tell us what Blackstone is in your mind, and then what are they doing so well?
Hi, Paul. Thank you for having me. Blackstone called themselves a juggernaut this morning, and they called in a press release themselves as sort of being a benchmark for the alternatives industry. They are in private equity, private credit, one of the big private real estate investors. So all these businesses are, some of them doing really well. Some of them are recovering from the kind of a lull in the last 2 years, and it's growing. They reached $1.1 trillion, so that's the largest alternative manager out there.
Let's talk a bit of real estate. Of course, I view them as a bellwether. I'm actually a U.S. Real estate stocks reporter. I'm curious, how are people viewing Blackstone and a lot of its deals recently? Are we seeing more activity happening in that sector specifically?
It is, and they very specifically alluded to it. They made a few very large 10 billion plus deals this year. They see in the bottom in the real estate cycle. They also see in private as being a bit more idiosyncratic than the public markets. So it doesn't move necessarily in tandem, but as long as they see the bottom, as long as they are seeing a lower interest rate trajectory, that should be supportive of the real estate space. The other thing is their real estate is quite unique, right? So when we talk about real estate, and especially commercial, a lot of people think about offices and these kind of things. For them, it's mostly data centers, infrastructure kind of real estate, multifamily. It's a different business. And in the data centers, they have over $70 billion of their $1.1 trillion just sitting in those data centers.
And I like to just take a look when I look at Blackstone. Stephen Schwartzman, the total Wall Street mogul. He's 77 years of age, co-founder of Blackstone. He's got a net worth today, $51.8 billion. That puts him on number 24 on the Bloomberg's rich list. Credit. Talk to us about the credit business, private credit business. You got about 30 seconds, Paul.
It was all about the credit. This quarter was led by credit. 40 billion of inflows, 20 of them going into the credit. All the upside in fees and performance, it was going through the credit, and the growth expectations, a lot of it is in the credit as well. So very consistent with what we're hearing throughout the year and other managers as well.
Paul, great stuff. Thank you so much for joining us. Paul Goldberg, Senior Equity Analyst, Bloomberg Intelligence, giving us the latest on Blackstone. BX is the ticker symbol, folks, so check it out. Check out that chart. Just amazing. Bloomberg News is out reporting here. Blackstone's credit arm is now its top business, fueling profits. They're in private equity, private credit, real estate. So as Paul Goldberg was just saying, they are the biggest alternative asset manager out there. Just extraordinary. That's Blackstone. And then there's BlackRock. I mean, if these two were together like they were back in the day, I mean, just
it would be insane.
Extraordinary. So just amazing. The private equity business continues. And the alternative asset management business continues to be just one of, if not the best business on global Wall Street. And the Blackstone folks are at the top of that. We're going to have more coming up. This is Bloomberg Intelligence. Good morning.